What is up, everybody? We are going to be doing a webinar, a little or not even live trading, but just kind of education with one of our students. He's been killing it. How long have you been trading, Hayden?
Just under a year.
Just under a year, and he's been doing a lot of challenges and just been getting the retries on the challenges. And the reason is we've kind of discussed is because he doesn't risk enough in the challenge phase because when you're in the challenge phase, especially if you have the time limit, it is one of those things where you kind of have to be a little bit more risky. And he was just kind of under risking instead of choosing to be a little bit more risky. So we're going to see if we can get him to the point where he is, funded and actually, making some good money trading. But we wanted to go over different things. We got Joe here, the man, the dude that's doing basically all the lives and, really helping a lot of the students with trading, teaching his techniques. I mean, we trade pretty much the same as you guys know, but, he added his things that he's really good at. And, the students kind of get a pick to see, which way they like to do things. Joe's the type of person that might choose like to enter a first position with a lot lower risk and then he'll stack if it continues in that direction when it's going against him essentially. I do the same thing. I'd say I'm a little bit more, I guess, cautious about entries, and there's nothing wrong with either way. It's just how I've kind of taught myself how to do it and how he taught himself how to do it, and he's killing it. So, it's working for both of us, and it's like I said, it's the same strategy. So, if we get into a position maybe a little early based on like an area of confluence where there's kind of like a little gap of that area where there's confluence, he might enter on that first area that's uh, will work, but sometimes it'll go against him a little bit more, and then he'll add again. But he's been calling some killer trades, been killing it. I know he's. Are you almost at that 400K TFT, Joe?
Almost 300K funded with another 300K that's in phase one. So probably within the next month or two, it should be finalized
Nice,
to be maxed out in funding.
nice. Well, heck yeah. See, I mean, I've seen him do some really cool things with trading, and I can't wait till this dude's 600K funded and making 60, 70, 80K a month. It's going to be one of those things where I see happening very soon, and that's just the power of it. You do something, you master it, you get a grip on it, and really put in the effort like he has, and you're just bound for success. So super cool. Super cool that he's doing what he's doing. But I wanted him to go over some of his setups that he's been calling recently and why we called them. We can discuss them, and I'll discuss some of my setups that I've been calling, and we'll do some more training with Hayden, and Hayden can actually give his input on certain things because he's for being under a year of actually trading, like he's doing really well, really, really well. And like I was telling him the last time we were on, I mean, you're at the right place to be for the pure fact that like we actually have everything detailed, a system that like when you should be taking a trade, when you shouldn't be taking a trade, and how to manage it all. So I'm gonna let Joe share his screen right now.
All right, I guess then I'll go over the trade that just hit take profit on Friday, and then there's one other trade I'll go over from the other week as well. USD JPY, the buy on USD JPY was a trade that I had first mentioned on like Monday or Tuesday, real early in the week, most notably because I was following it along on the daily time frame, noting how we were creating bullish price action. We came up to a point which we dropped, I'll even draw a little box around it, an area of structure on the daily time frame. But dropping from that area, important not just to note that we made a lower high compared to the previous high, but there was a buildup of daily bullish structure which hadn't been retested. And to start on a higher time frame, because really the weekly is where we see it best. Weekly, I was still identifying as bullish because we had broken through the weekly 50 moving average, broken through weekly resistance, an area that had tried to hold up as resistance and failed to create a new low, came up again, created another higher low, and that was the buildup of that trend line. Then when we broke through that area of structure and the 50 MA, we had not retested it on the weekly time frame. So earlier in the week, I had seen that we were in a big bearish weekly candle coming down to that area. So for me, I was starting to zone out that area as the area of structure, the weekly 50, it was a trend line touch. The daily 200 was also there. Now, why I didn't look to trade at the daily 50, because the daily 50 was hidden divergence when it hit that point. But the reason I wanted to wait for that 200 is because it really gave it time for the shark fin to develop in a very clear, obvious shark fin at an area of confluence where it was
A
a
much
nice
a
trend
much
line
better
touch.
area of confluence than that 50 moving average for sure.
Yes, that's where when something's coming down, in this example, something's dropping, and you can identify a moving average here, moving average there. Even if you're pulling up a fib and you're seeing what you could get, and you look at where that 50 is on the daily, and the placement, like Derek was saying, really wasn't that great. Wasn't a great area of structure. It wasn't a fib level, but waiting for it down here, it was the weekly 50, the daily 200, daily shark fin, trend line, 0.5 fib level. It literally was checking off all the boxes as far as the confluences went. When
Yeah, it was a super
scaling,
great trade.
and it played out pretty quick. I mean, I still think it could rise a little bit more,
I
but
think we'll see it hit that 50 on the daily.
yeah,
It's making those higher lows in there. Now it's just got to break that trend line essentially. If it breaks that trend line, I think we'll see a retest of that low. But it's kind of, depending on what it's going to do in the next session that moves.
yes. And it played out pretty quick. Like it all played out overnight, where I called it in the beginning of the week. The actual entry, the night that it was Thursday night and it played out into Friday. Um, it was a solid 1-3, and I didn't advise to take partials before that point. So anybody who took it should have made a full 1-3 on that trade. The actual entry was a 5-minute shark fin also, which was pretty crazy. I mean, the entry was worst case scenario, you might have had like 13 pips of drawdown, but it wasn't bad for a 160 pip trade.
Yeah, no, that's solid. I feel like that's how we've been calling our trades lately. Like we've been definitely more consistent in like letting our trades hit the full take profit. Like because sometimes you get a little signal on the lower time frame. Maybe like you're taking a 4 hour trade, you're getting a signal on the 1 hour that's telling you, oh, this is probably gonna drop from here. But like you look at like the 4 hour, the daily, and you're like, well, this thing's gonna rise. You just gotta have that patience, and it's one of those things that you develop over time. The fact that like, okay, now I'm gonna take it to that next step. I feel like it goes through phases where, initially you're taking your profits at that first area that can go against you, and you're like, oh man. And then you watch these trades play out more and more. And the more you watch these trades play out, you can see when they retest, where they're going to retest off of. Like if they're going to do a pullback, like you could draw, that support in there where it did that pullback and then shot right back up. It's like one of those things where it's like, well, that makes sense. It's also an inverted head and shoulders. So that will make you more confident as well to hold that trade if the take profit was higher. I still think we could see a potential rise, but the higher time frames, they are very bearish as far as like that big reversal move and the fact that it made that lower high into now that trend line basically, and that support turned resist, or that resistance turned support. But honestly, a killer trade. Um, like you can't complain with that.
No. And like I was saying, if that's the only trade you caught all week, and I mean, like you'll call one or two of those a week. I'll call one or two of those a
Hmm.
week. We have members that are calling great trades like that. Like even if you were to literally just take one of those, a full 1 to 3, 1% risk, like you could have a 3% week overall, a 10 to 12% month. You could even have a 9% month taking one loss, and if all the other ones are wins. It's really like I like that we talk about that a lot. The fact that it's not a
It's so
numbers game.
true.
Yeah.
It's just the fact of like that risk management and like using a good risk reward, holding your trades, doing what you're essentially supposed to be doing, following through with it, and like not letting the emotions get in the way. But it's also like doing the thing on the opposite end too. If like you see something that you didn't see before that you now see and you're in a current trade, it's like you got to make that decision. Like, are you going to hold or are you going to take that profit right there because of that massive maybe confluence that's going against you? Like, that's also part of being a trader is the fact that you have to dissect different things. You got to play detective. You got to, like put the facts together and really, kind of make what I would say is like a list of things that would keep you from holding this trade. That's essentially what I do. Like if I'm in a trade and I all of a sudden see something, maybe it's a major retest and we have a shark fin on, the hour time frame that's like pretty solid, and it's like I'm not going to hold that trade all the way. But that's just my 2 cents in that, it's I I I like the whole set and forget mentality, but at the same time, like if there's just obvious things, I feel like it's just the smart thing just to look at it and do what you probably should be doing.
That happened with an AUD NZD buy signal that I had called like 2 weeks ago. It was right over here, where originally, based on, let me just clean this up a little bit. Based on the higher time frames, I had a much higher TP originally drawn up for the trade. But once it
Mm-hmm.
started to climb up to that area, there was a very obvious area of structure that was going against the trade. And then the TDI was climbing pretty high, making it
Yeah,
hidden
that looks like
divergent
a
as
pretty
well.
it looks like a pretty nice sell.
Yeah, it did. It was a perfect area to take profit at versus trying to hold it to make a new high.
Yeah, that was a good area. Very smart.
That was
And
another one where
actually,
the entry was real nut right off the moving average, gave a really nice entry.
yeah, no, that was solid. That was super solid. What other trade did you call? Did you call another good one?
Euro JPY.
Euro JPY,
Euro
yeah.
JPY.
We had a one of the students call CAD JPY. The buy was super nice.
So Euro JPY was actually one of those moves that was really nice because it was going with much higher time frames, meaning that the weekly was giving us a shark fin. The
Hmm.
daily was giving us shark fin divergent that actually came up and made a double or triple top on
You
that
can tell on
divergence.
that daily how much hidden divergence that move that rejected on that green line is. If you
Yeah, I
look from that previous low, like super hidden divergent,
think it was a trend line also. You could get going up that way.
I'm sure.
So I knew that like
Looks like a
any type of
retest.
yeah, with the trend line also from the tops.
Hmm. Yeah, that's what it looks like right
Derek
there.
has a very good eye for these types of trend lines.
Yeah, right? Yeah, that was solid. I mean, if you would have bought that, that would have been a solid move.
Yeah,
Did
no,
you buy it or did you
it
sell?
was the sell. So like
Oh,
the
okay, you sold it.
weekly,
Yep, yep.
yeah, it was because of the weekly shark fin at the top. The daily made divergence. I didn't catch it at the top because I knew that that's a very tricky thing to do and very bullish price action. But once I noticed there was a weekly shark fin, daily divergence, really my eyes went to that 4 hour 50 because instead of trying to catch the top of moves like that, I think it's such a great, like it's so great when you have a 4 hour 50 that lines up at the last area of structure that was used, like the last level of
Right.
resistance that turned into support. When that broke, that was when I had called to sell at the 4-hour 50, which it came up and tagged it almost right on the nose, and then dropped. That was another pretty much a 1 to 3.5. That could have been
Yeah.
held a bit longer because most of the time these moves from the 50 will actually come down to the 200. But I based it
Yeah.
off of the first area of structure to get out, which again, I'm not mad. If I catch a 1 to 3, like I really can't complain, or 1 to 3.5.
Yeah.
It's better
Exactly.
than, not always, you preach like the base hits versus always trying to get a 1 to 6 or a 1 to 7.
Yeah, I mean, just as equally as it could have came down to that 200, it could have shot back up, to your entry,
Exactly.
So it's just taking what you can get and be like repetitive with it. Like, okay, if that's where you thought it was going to take profit, like that's a great trade. I mean, there's literally nothing wrong with taking profit right there. Like,
I feel
you
like
could
as
have got a
long
little
as
bit
it's a
more.
logical area, as long as you're
Yeah,
using structure,
100%.
moving average, something, not a FOMO
100%.
close.
And there are times though, like there are times when you'll, hold 10% of a position. There's literally nothing wrong with that. It's just like kind of how do you want to do it? Do you want to take 80% profit at that area and see if it's going to continue and just put your trade in your stop loss in profit? Like there's nothing wrong with that either. It's like I feel like, you can be creative with the ways that you manage your trades and, if you want to hold, then hold it and have a different area of take profit.
I think it's
Keep
all about
20% on.
entry. Like you're saying,
Yeah,
like you're talking about stuff that like you can only do if you get a nice entry. If your entry is horrible, you won't have the option to move your stop loss to break even. You'll be sitting in drawdown. But that's one thing I really learned from working alongside with you is the timing and really waiting for that best entry. So that way you have the option to do all these different, take partials,
you
move
just
stop
get to
loss to break even.
exactly. You get to be better. Like if you get that entry at that right point, and like there's obvious areas of confluence in the market. Like we see them all the time. And so when we have that area of confluence, and it's like, why not wait for that like first area of confluence to be hit before you take the trade? When you take the trade, then like maybe you'll get a little bit of drawdown, but you can even add positions in that drawdown because there's such a strong area of confluence that's going with you. And it's like for me, when I add positions, like I'll know on a trade if I'm like not super like, oh, I don't know if this is going to be the exact time it reverses. And it's usually when I'm trading like the daily or the sometimes we'll trade weekly charts. It's usually on those times where it's like, well, I don't want to miss this reversal because if it's going to reverse on the weekly after like moving for a long time, it's going to usually like move pretty quick, I
Like
feel
German
like.
30.
Yeah,
That was a
exactly.
good one,
So
the
it's
German
like,
30.
yeah, I don't want to miss that. Like, so I will add a smaller position, maybe at that first area of confluence, and then add, up to 3 times to get to where I essentially can be better at managing my trade. But it's also like you have to put in a little bit of work to figure out what you want to risk at first. Like, okay, what size lot am I going to use? You're going to have to do a little bit of work. You can't be lazy. If you want to put up to 1.5% on the board, it's like maybe you only want your first entry to be 33% risk. And then, divide the next 2 entries by 2 with whatever's left over. But that takes a little bit of work, So, but it's also, I appreciate someone that will do that. Because to me, if they can do that and they can follow like trading rules, like no matter what, like for us to have like for us to be like not positive out of like 10 trades, like we would have to lose like 7 trades essentially if we're like just holding them full take profit. You'd have to lose, I think 7 out of 10 trades if you're using that 1 to 3 risk reward to even like be break even. So it's like the average person, if you can wait for confluence and find the confluence, like you can be super profitable. You just got to take the trades, and you just got to do what your stop loss and take profit is. If you don't, then like that's just something you have to grow into as a trader.
The other thing too, for especially for newer like people, the big thing that's helped me Joe kind of helped me get into this too, is using it's a little app called FX Calculator. You can download it from the App Store, Google Play Store, whatever. But all you have to do is you literally enter your account size. For Joe, if he's trading a 300K account, you type in 300K account size, you put in your stop loss, your take profit, and then you enter how much you want to risk. So depending on the setup you see, for us, we grade our setups from A plus to generally we don't take anything above probably, okay, I want to risk 2% or I want to risk 3%. All you literally have to do is type in 3% in the FX calculator, and it's going to give you the exact lot size that you need to use
Exactly.
to, get the full 6% or 7, whatever percent out of it. And I've dropped this in the chat a couple times in TSA, but it's a huge game changer because you don't have to, sit around and try to calculate it and all of a sudden, oh, I missed the trade. All I got to do is just type in my account size and just type everything in and it'll tell you the exact lot to use. So that's huge.
Yep. Exactly.
It's a
Appreciate that.
must. Most people are like, I don't know, I like the number 5, so I just go with 5 lots every time.
Yeah.
Right?
Then my account's gone in 30 seconds. What happened?
I
Yeah.
don't mind if you do that, like, right? Like, if you're just going to use the same lot size, because I've done that.
Yeah.
But you just want to make sure that, like, you know how many times you can enter based on the lot size you're using on your account and according to your stop loss and take profit, obviously.
Yeah. And
I don't mind using a fixed lot at all. Like, I've done it, but like, I think it's good to have like that like very strict like plan. I think that's good, and I'm not the most like organized person, so that's why I do the fixed lot typically almost every time. But I don't see the issue with either way. Either way, you just want to make sure you're under risked
right.
Yeah, like you do it on
rather
your
than
personal
over
account.
risked.
That
Yeah,
you're under
exactly.
leveraged most of the time, so it's
Yeah,
easier to get away with it.
exactly.
And then like once you
I was gonna
trade,
go over.
yeah,
No, go for
yeah,
it.
once you trade like a certain account for a certain amount of time, like for instance, if you traded a 100K account, okay, like once you figure out how much 2% usually is for lot size, whether that's a 4.0 lot or a 5.0 lot, you can typically kind of just go off of that to figure out your lot size. So
Exactly.
you kind of once you do it and you take a certain amount of trades, you'll kind of figure out, okay, you'll kind of just memorize it, like, okay, this is 2% risk. And so you don't have to, like Derek said, you can just use your fixed lots and you just can enter it right away. Like on Derek's trades, he typically enters with what, like 30 lots typically.
Yeah. Yep.
Yeah,
Yep.
so he just knows, like just with the amount that he uses, he knows, okay, yep, 30
And
lots.
that
This
will
is what I want to risk.
I can add up to 3 times and still be like
Yep.
pretty well
Yep.
under leveraged, like
Right.
right around like like I said, I'm not super organized when it comes to like I've never been the type of person that can like be like robotic like that. For some reason I can keep my emotions very robotic when it comes to trading. I think that just comes with like things that I've encountered in life and just kind of losing losing that part of myself when it comes to stuff like this. Like really this stuff does not phase me anymore because you just look at life and you look at the things like, okay, life's okay, everything's okay. If I win this trade, I'm happy. More than likely, I'm going to win this trade, just proven by my past. And if I lose this trade, you know what? Like, I'm okay with losing it. That's fine. It is what it is, and just move on to the next one. I never let it like bother me.
Right.
I think where it would bother me is if I was risking too much. If I was risking 4 or 5% on a trade, I'd be like, dang, dude, like I just lost a good chunk of money. I wouldn't be happy.
Like there goes 100K.
Yeah, I wouldn't be happy. So that's where I'm kind of with it. Like, whatever. Like, lose one trade, typically I'm going to win 9 out of 10 trades.
Right.
So it's like I just don't see there being an issue anymore. But I'm also like very different when it comes to trading as far as like most people. Like I see some of these mentors taking like 5 or 6 trades a day, and I'm just like, geez, dude, like that's a lot of trades to having to be managing and like
Right.
and I get it. Like, there's sometimes when the market's moving and they see things moving and they catch the right side of that, but like, there's times when it definitely, I know that there's things that aren't shown on there
Hmm.
that definitely affect people's accounts.
Yeah, and a huge
Uh,
prime example of this too. I mean, like if we cover this today's Euro USD last week, what
yeah,
happened with
yeah,
Euro USD? You know, like
exactly.
there were things that we saw in the market that we thought were going to be good that we wanted to enter in on, and it didn't end up playing out. We missed a couple things, but
Exactly.
we're
I'm
under.
actually going to go
Like
over
Derek
that.
even put it in his in our chat. He said, make sure you're under leveraged on this. For things such as this reason. So that way, if we do lose on a couple positions and it doesn't go our way, big deal. You know what? We'll move on to the next one and we'll wait for it to move to a different place that we like more and we'll end up trying to sell it again. You know what I mean? But
Exactly.
yep.
And I did want to go over that actually. So as you guys know, I've made a YouTube video about it. I was calling on, I think, the 2 week chart that we're going to see a nice retest of that 50, or there's a trend line right here. If we look, so we have that trend line going this way. We have a nice trend line going from the high. So we do have that crisscross going on, and we came up and retested that. I entered a little early and it was like so stupid because I didn't get any TDI confirmation, and it's been one of my rules forever. Like, I will not enter a trade if I don't have TDI confluence in the trade. If my TDI is not showing me that I should be in the trade, then I'm not going to take the trade. That's just as simple as that. And I messed up by, going against my own rules, and like I caught myself, and I was going to move my stop loss. And then I'm like, you know what? I'm not doing that because I thought that we were in an area where we can see a reversal. I still think that we could potentially, but it was just a stupid area for me to enter, to be honest with you. The area that would have been better is actually where we're at right now in the market, and but I still don't have that TDI confluence. I really don't like how our TDI looks on this 2 week chart. Daily's creating like a very ugly shark fin. What I mean by ugly is like the RSI and the Bollinger Bands are like really climbing together. I call that like an ugly shark fin. And really the only confluence we have essentially now is that retest on the 2 week chart. I mean, it's on the weekly, daily, 2 week, monthly, but it's one of those things where it's like, I'm not in love with the trade. I knew it was going to come up to that 50, and it did, but now I'm not super in love with it, so I can change my bias. Now, if we find something, like maybe we create like a massive shark fin on a certain time frame, then I'll be more prone to sell that. But for this, it's like I entered too early, stupid move on my behalf, and it's one of those things that I won't do it again. I'll learn from it, and like the last time we did it on a different pair probably 4 months ago. It was another retest, but there wasn't TDI confluence
Yeah,
on
we
like
had
USD CHF.
always used
And
DCHF. Yeah.
and then after I saw it, I'm like, okay, it's going to head to the daily 200, and that's where it's going to reverse. And it is where it reversed, and a lot of people caught the sell, but other than that, it was just, stupid things. And it's the only time I lose essentially is if I do something stupid like that.
It's a reminder of like not just like where the patience and then where the discipline comes in. Like the patience to find an area that's where several confluences are, wait for it, and then when it gets there to have the discipline to make the decision of like, hey, I waited for this for a week, or like for EU, I waited for this for 3 weeks, 2 months, however long it was, and it gets there and it's hard to have that
I was married
discipline
to
to
that
just,
trade,
yeah,
essentially.
exactly.
Like, I had emotional attachment because I was the buildup. You know what I mean? So it's like, oh, I got it. I can't miss this now. And I had, people in my ear, what about this retest on EU? What about this retest on EU? And it's like, stupid, but it is what it is. Yeah, anyways, I wanted to go over this German 30, unless you had anything to add on that, Joe.
No, I don't think so.
Okay. So I'm going to go over this German 30 trade that I had called. This is the daily time frame. You could probably see the confluence pretty good right here. So let me actually remove all this stuff so you can see it better. So we obviously have this trend line from the lows right here. I'm sure if we pulled it back, it'd probably be running through here or something too. We have this nice area of resistance. As you can see, like the market was rejecting this area, and then we broke through, we retested, and as you can see, we obviously like retested this area for quite a while, broke through, retested, and then we came back to this point where we have that crisscross that I love. I believe that there was a shark fin on the 4 hour, 5 hour, and the 6 hour. Let me pull that up. So we knew that confluence was there. Let me just replay this so we can kind of see how, oops. Let's go right there. So as you can see on this the 4 hour shark fin, I mean, it was decent, it was deep. I don't typically like when that RSI or the Bollinger Bands follow the RSI. It's not my favorite, but it does work out a lot of the time still, regardless. And then what I really liked, I like the 5 and the 6 hour. So when these Bollinger Bands are like super wide down here like this, you see how spread apart? We had this like massive shark fin down here. When we're on this area of confluence and we have a shark fin like that, it's like that was hard for me not to take just because it was solid. Like the thing I didn't like about the trade is the fact that we made this lower high in here. Obviously not as high as this previous high, and when it came down here, it did make that lower low essentially if we look left in here. So I would have never traded it at the support. I would have never traded at the support here. I wanted to see it make that lower low, at least in this area. And when it did, it hit that trend line perfect. It hit that support zone perfectly. We had that shark fin, and it had a shark fin on that 6 hour too. Like super nice, just a solid setup. And when I had the take profit, I wanted to hold it to the 50 moving average on the 4 hour. So, I mean, it played out super nice. I'm not even sure, did it have let me look if it had a Fibonacci real quick. I can't remember. Oh, it was a 50 level Fibonacci too. So, as you can see right here, it was a perfect actual 50 level Fibonacci, which is nice. So that's the reason why that trade was took. I mean, it's like, I feel like I've called for really good signals in the past month, or it's been at least once a week, and they've all been on like the same setup where market reverses, it comes to like a crisscross, an area of support, hits that area, and then plays out exactly how it's supposed to. So that was why I called that trade. It's just like the obvious things to me. If like there was super obvious trade, everything lined up, there's no reason why I shouldn't take that trade. Essentially, and those are typically the trades I want to see. I want to see that nice area of confluence where like the market has reasons to why it should reverse off that area. And there was multiple, there was the crisscross, support, trend line going that way, and then the deep shark fin, and then you get that 50 level fib in there. It's like there's 5 confluences right there.
And that's where, like, if you compare it to people who just trade price action, like price action is one out of, like, you're listing them, 5 or 6 confluences that you use. And that's the difference between traders who have a 60% win rate and traders who have a 95% win rate. Is you're not just trading every support turn into resistance, but it's like only when a support turns into resistance, and then your indicators, your trend lines, everything's happening at that spot.
For sure. Exactly. And that's the thing. It's like, I don't want to take like a trade that's just like, I don't know if this is going to work out. Like, I'm just not that type of person mentally. Like, I want to know reasons why they happen. And I think that's how this kind of strategy came about, actually. It's just like, I want to know when the market's going to reverse. And I want to find the reasons why, because I can see patterns in my head. So like, how can I put this all together to make something that like connects, that I should know which shark fins to be in, know which shark fins not to be in. Like that was the biggest thing for me, is because like when you get those false shark fins, it's like, oh no. So that pretty much eliminated most of them, most the false shark fins, I would say, which I'm happy with that. Like if I win 8 out of 10 trades, I'm a happy trader, you know? That's how I feel about that. And then I did call a GBP CHF trade. And I did have everyone put their stop in profit, and there's a reason why. So we did get stopped out in profit. It is what it is. But the reason why I had everyone put their stop in profit is because I saw this right in here, where we had that little area where we rejected here. And I can move this down a little bit to connect the dots a little bit more. So rejected here, rejected here, rejected here. We came back off that shark fin, retested that pretty heavy, and then obviously tanked off that back to the entry. But that was one of those where like I did really want to take profit in there. I think it was Friday afternoon. I chose to hold it, and it is what it is. I should have just taken profit like I normally do on Fridays if it's at an area where I don't like. But this may actually reject off this still and create it off that divergence. We can see that happening, or at least I can see that happening. It's a little bit better on that 4-hour time frame where you can see that. But we may get that divergence, and this trade may still play out. I'm not going to enter again just because if we look at the daily time frame, and this was the reason why the trade was taken, by the way, we have this trend line going this way, trend line from the low, so we are on that retest. I can just see this thing though, the way that the RSI is looking with the Bollinger Bands, I can see this thing continue to drop and maybe hit. Like, let's put it this way, like if the market came and gave us a big swing up and then hit this retest, I'd be much more like wanting to take that trade. Like, but for the fact that it only, broke it a little bit and then came back to this area, I feel like that's when the market will not respect the retest or whatever's on the chart more often. And then it made that lower high in there, which scares me. So I'm just not going to enter. I entered, obviously it was up like 60 pips or something, 70 pips, but not even like 50. But it is what it is. But and then what else? Do we have anything else that I've been calling?
It's crazy that like even if a trade doesn't play out, it's still, if your timing is right with the entry, you'll still get 40, 50, even 60, like enough to move your position to break even. Where worst case scenario, at least you have the option to take a break even if you time your entry.
Exactly. I'm just trying to see if there's anything else that I was looking at currently. Oh, that was USD. So I had the same trade idea as Joe for USD JPY. Looks exactly the same. There's that nice area retest. We have that trend line from the lows. Obviously, all this nice support in there. Joe explained that very well, but I did like that. USD CAD, this was another one. I barely missed it. That was a sad day because it was such a good trade. Let me reset that. So obviously it was such a nice trade. I'm so sad I missed that. So sad. So we had this rejection, broke through, rejected. We obviously broke through from the lows. We swang up, hit that retest perfectly. What time frames? I know there were time frames that made very nice shark fins. I mean, these all had shark fins, but I know there were time frames that had like a lot better. Maybe it was the 4 hour. 4 hour had a very nice shark fin. And this was just me, and this can happen. Like I was too picky with my entry. I didn't like kind of finagle my trend line as well as I could have to get all the touches. And that is essentially how I missed that trade. Was it on a moving average as well?
Might have been the daily 50,
Daily 50, is that what it was?
I
Oh,
think.
yeah.
It was like a perfect, or either just
Yeah,
touched it or
see,
just missed it.
yeah. So it almost hit that daily 50 moving average, and that was another thing that like kept me out of that trade is like I was waiting for that daily 50, and you'll see that happen, missed it by a few pips, and that's just it's crappy, but it is what it is. That was a beautiful trade though. Beautiful, beautiful trade. You want to go over some more, Joe, tips that you can give? I kind of, just wanted to go over like what we've been working on as far as trades and how we take our trades, maybe a little bit of psychology stuff. But if you want to share some stuff, you're more than welcome, my man.
Okay, let me see that. Yeah, for both of, I mean, a lot of the trades that I think all the ones that we had just gone over really emphasize the importance of timing the entries with structure and not just a matter of moving averages or trend line. It's really a matter. I think it's so important, like the patience. I know, like we touched on it a little bit, but the patience with waiting for things to line up. And yeah, it does suck when you see so many things lined up in one spot and you miss an entry by a hair, like with USD CAD. And I just feel like that's really part of the game, that if you're missing trades by a little bit, you're doing something right. Because if you're in every single trade, every single move, that means you're more than likely in moves too early, and you're also going to be in moves too early when they're trades that don't play out. So I actually think it's a good thing that kind of helps you know that you're on track and that you're maintaining that discipline when you are waiting for, say, a safer area of confluence, or an area where three things line up versus an area where two things line up. But it might tap the first one and play out and you miss it. But you followed your plan, you were staying disciplined versus trying
It,
to enter too early. Because I know entering too early on a move that doesn't pan out well is bad. Like what you were saying, Derek, with Euro USD. Because not only are you in
yeah,
early, but now it's like you either have to have a bigger stop loss than you originally wanted, or you're going to lose more money than you had originally planned when you get in early.
yeah, exactly. And it was
Yeah.
such a stupid trade on my behalf. But you're 100% right. Like it does suck to miss good trades by just a few pips. Like it does. Like I'm not gonna lie, but it also builds that muscle. Like if you can wait to where you want to enter, like that's typically how I do it. It's like I wait till that area I want to see hit, and if it doesn't hit that area, like I'll miss that trade. Like I missed an AUD NZD trade because it didn't come down to that perfect retest area where I wanted to see it go to. It is what it is. It would have gave a nice move, but like I missed the trade, and like it builds that muscle though, man. Like if you continue to do that and just wait for those like perfect area confluences, those perfect shark fins. Like a perfect shark fin to me is either on a higher low or a lower high that's on that, like, dude, like USD JPY, like that's a super solid setup. You get a shark fin like that on a lower time frame, like you're gonna win that. The German 30, that's a perfect setup to me. I mean, all those trades that we call, they're actually like very good setups. Like if you look at how price is reacting to things and how it reacted to things in the past, they're very good setups. And it all makes sense. If everyone else can like contain their FOMO and like just enter trades just because they want to see some numbers on their phone or their computer screen, like they'd be way better off if every trader used proper risk management like on their funded accounts. Like maybe, like I said, you're starting off a challenge and like you have X amount of days to pass, like, yeah, maybe risk 2.5-3% on a trade. Like, but just make sure you're not risking more than that. Make sure that you're not moving your stop loss. Just, make sure that you're doing what you're supposed to be doing as a trader so that you can stay in the game and give yourself a chance, essentially. Like, that's really the only way you're going to give yourself a chance. Like, if you're risking 5% on a funded account, like, you got to think about it in logical terms. Like, that's not the smartest thing to do. Like, because if you lose, you essentially are losing your funded account. So you don't want to be doing that, just as well as you don't want to be like having too much risk on the board with multiple trades. Like, just because there's maybe 3 or 4 good setups or decent setups on the board doesn't mean you have to take all 4. Like, for me, if there's 2 or 3 good trades, I will literally only be in one of them, unless like both of them are perfect or all 3 of them are perfect, which is rare that it happens. There's usually something that looks better on a one of the trade setups than the other, and like I'll take the one that I feel is the best setup, and that way I only have to stick with that one trade that I have to manage now. Like, there's so much greed in this industry. It's insane to me because I know 99% of these people aren't making the money they want to be making, but yet they're risking their money like they have it. They're risking the money in the funded accounts like they actually have it, when it's like, you don't even have that money yet. So take it slow. Be okay with a $5,000 month. Be okay with, a $10,000 month. Like, just try to get in the profit, try to pay some bills, and like, you don't have to swing for the fences. Why do you think these funded account places market the people that win big? It's because those people are risking big, and then next month they come in and they lose their funded accounts. So there's a reason why all this marketing is happening. It's because they don't want you to stay in the essentially the numbers, like, to the non-educated person, I feel like just excites them. And not even non-educated, like somebody that just doesn't have self-control, I feel like it just excites them. Or maybe you're not aware of like how to actually do it. Like, I'm not trying to dog on anyone, but the fact that you can build something over time, especially with all these prop firms, and you can maintain something that actually pays you every month, but you get so excited about, you want to be the next guru that's like famous online, when in reality, the likeliness of that happening is like slim to none. Like, you should really be focusing on being a trader. And if you feel like you have really good knowledge, like, give that knowledge out and see if people like your knowledge. Like, I hate the facade that's going around in the space of like, you have all these Lambos and watches, and
Full-time traders.
yeah, it's just not realistic. Like, these people wouldn't have been able to do that if it was just trading. So that's where I'm trying to get at it. Like, that, to get to that level, like, if you can do that as a trader, but it's not going to happen in a year. You're going to have to build businesses that are killing it alongside your trading, if you're even profitable trader, that are, you can spend, money from your businesses, and then like, okay, let's see if we win or lose in trading, market the wins, and there you go. Now all of a sudden people are going to your businesses. But like, for me, I really want to pride myself on like the fact that like I'm trying to do this like all right. And like, even when like maybe I have businesses take off or whatnot, like, I'm still not going to be that person that's going to be, risking stupid money. Like, I want to show people what it really takes if you really want to be a trader. Like, because most of these people are marketers. So if you really want to be a trader, it's something that is not how it's portrayed online. And that's what I tried to get everyone's head around, because everyone's living in that fantasy land of, I think I'm going to get rich, or I'm going to make 100K in a day like all these other people. But you don't realize like all these other people have also made 100K in a day elsewhere. So at least a huge majority of them. So it's like if they lose maybe that 50, 60K that's in their broker, it's not going to devastate them. You know, they'll get it back somehow, or they're making 200K in another business or whatever it is. Like, they're not devastated by that. And it's just the fact that like most people can't do that, and it's not realistic. It's like, that's why you should get in the good habits now and not try to honestly like be a hero. Like, be somebody that's consistent when it comes to trading.
Like
It's
smaller numbers but consistent numbers are much better than the guy that pulled 30% 1 month, but then pulls negative the next 2 months. Like the
100%.
inconsistency and the blowing. Yeah, like you said, it's all a marketing thing where it's almost like with the news on TV. You only get a certain side portrayed to you that they want you to see, but you don't really know what goes on behind the scenes. It would be nice if
Exactly.
prop firms interviewed the people who have held down a prop firm account for a long time. Interview the people
Yeah.
who've been on a prop firm account for 6 months, 8 months. There's people that have had and held down the same account for a year or close to a year. Not They're very, very few people. Less people are doing that than they are hitting 50K payouts or 100K payouts, because that's how much
100%.
harder it is. But yeah, those are the
Exactly.
people we need to hear from.
100%. You won't see me doing an interview or anything with people that I know how they're really operating and what's really going on behind the scenes. And I don't think they have your best interest at heart as a trader and like for your success in trading. There's very few that I know that do. Um, but that's what I would be searching for personally. Just with all the life that I've learned, like I went through the phase of like think this was a get rich quick thing because that's how it was marketed to me. Um, and now am I upset that I got marketed and I fell into the trap for a little bit? Absolutely not. But there's times where you can change it and like really actually start earning from the skill.
Big thing with these prop firms too is like they're very similar to casinos. I mean,
Mm-hmm.
they're like, in honesty, like, do these guys who own these big brokerages, do they want to pay you? No, they don't want to pay
No,
you.
exactly.
It's the same
Exactly.
thing as a casino. They're gonna give you all the big flashing lights and all these big commercials and all the this and that. And you're gonna see all these people who, oh, I won $50,000 of this and that, but you're not seeing behind the scenes the thousands of dollars that these people are blowing every single
Yeah,
month, and it's all going right
exactly.
back to them. That's all it Yeah, it's all a marketing scheme, you know. All they want you to do is to spend $200 on a challenge, and they want you to risk 10% because then that's 200 bucks coming right back to them that they can keep,
Exactly.
you know.
Exactly. I mean, I'm grateful for the space and what's been created, but at the same time, it's like you're the decider of your fate when it comes to that. Like, if you want to earn and do it the right way, do it the right way. If you want to be, uh, let's say, just like a influencer type trader, then you know, keep doing what you're doing. See if it works out for you. That's how
Yeah,
I
it's like
feel.
once you know better, it's one thing when you, like you were saying, Derek, when you first come into the space, most people are attracted you almost get led into believing the wrong thing. But then once you
Mm,
know the difference and realize that there is a right way, a wrong way, then it's different. At least once you have the option, you can consciously make the decision to try to learn a better way of doing it, a consistent way of doing it, versus trying to just win the lottery, hit the jackpot type of mentality.